Alright, let's talk about one of the lesser known players in the artificial intelligence world that has been quietly making waves, and that is BigBear AI Holdings. Now, you might not have heard as much about this company as some of the big tech names, but with a market value just slightly above $2 billion, the company's whole focus is on helping other businesses make smarter, faster, and more efficient decisions using artificial intelligence. In other words, it is not just building technology for the sake of it, it is creating tools that solve real-world problems for companies that are drowning in complex data. Now, if you are looking at the performance of the stock lately, it is easy to see why people are getting excited. Coming into this week, BigBear AI's stock had already climbed more than 65% since the beginning of the year. That is a huge move. But what makes it even more interesting is that despite this impressive rally, the company's overall valuation is still considered relatively modest. That combination of strong momentum and a reasonable market value has investors thinking, hey, maybe we are still in the early chapters of this growth story. And let's be honest, everyone wants to get in early before the next surge. So naturally, with the next earnings report scheduled to come out on August 11th, the question on everyone's mind is whether now is the right time to jump in. Because let's face it, a powerful earnings report can act like rocket fuel for a stock. When a company shows that it is growing faster than expected or making real progress toward profitability, investors start piling in and the price can shoot up in no time. But here's where things get a little tricky. If we look back at BigBear AI's recent history, the stock has not really performed all that well after previous earnings announcements. In fact, during the past year, the stock usually ends up dropping once the earnings numbers are out. For example, let us rewind to May 1st. That is when BigBear AI released its last financial report. They announced a 5% increase in revenue and said they were sticking to their full-year expectations. Sounds okay, right? But the market was not impressed. There was no major surprise or excitement in the numbers, and as a result, the stock began to slide in the days that followed. But here is the twist. Even though the reaction to the earnings report was lukewarm at best, the stock eventually went on an impressive run afterward. Since that earnings date in May, the stock has more than doubled in value, and that raises a really interesting point. It suggests that earnings alone are not the only thing moving this stock. In fact, what seems to be making the biggest impact lately are the announcements of new partnerships and collaborations. In recent months, BigBear AI has signed multiple agreements with international airports and even the United States Army. These deals show that major institutions see real value in what the company offers. And when you get validation from such large and serious players, that sends a strong message to the market. It tells investors that this company is not just talking about AI, it is actually putting it to work in high-stakes environments. That kind of credibility can push a stock higher, even if the earnings numbers are not setting the world on fire. Still, despite all this excitement, there are some big warning signs that we cannot ignore. For one, the company's financial performance has not kept up with the hype. Yes, revenue has grown a little, but it has been far from explosive, especially considering we are in a time when demand for AI services is booming across almost every industry. And then there is the issue of profitability. BigBear AI is still losing a lot of money, and there is no clear roadmap showing how or when that might change. If the upcoming earnings report does not show a solid improvement in revenue, or at least provide an upgrade in future guidance, the stock could be at serious risk of losing some of the gains it has made this year. Let us also not forget about the bigger picture. The economy is still in a pretty uncertain state, and that affects how companies make decisions. Businesses might be interested in AI, but that does not mean they are ready to open their wallets just yet. If BigBear AI is relying on major contracts or new spending commitments, they could face delays or even cancellations, especially if economic conditions worsen. That adds another layer of risk for anyone thinking about buying in before August 11th. Now, here is my take. BigBear AI has a lot of potential, and it could become a major success story down the road. But right now, the stock feels like it is priced for perfection. That means investors are already expecting a lot of good news, and if the company does not deliver something exciting in its next earnings report, things could turn south quickly. The margins are thin, the spending is high, and the sales growth is not quite where it needs to be yet. Even with all the press releases about new deals, what really matters is the bottom line, and so far, BigBear AI has not delivered strong results where it counts. So what is the smartest move right now? Probably patience. Instead of diving in with both feet before August 11th, it might be better to sit back and wait to see what the numbers say. If the report is solid and shows that the company is finally turning the corner financially, then there could be a great opportunity to buy in with more confidence. But if the report disappoints, you will be glad you waited. Sometimes the best investment move is knowing when not to rush. Essentially, BigBear AI Holdings, a company focused on providing artificial intelligence-powered decision decision-making tools, has seen its stock climb over 65% since the start of the year, drawing investor interest due to its relatively low valuation and recent deals with the United States Army and international airports. Despite this momentum, the company's financial performance has been underwhelming, with only modest sales growth, ongoing large losses, and little clarity on when profitability might be achieved. Its last earnings report on May 1st failed to impress, yet the stock doubled afterward, driven more by partnership news than financial results. With the next earnings update expected on August 11th, many investors remain cautious, recognizing that unless there is a clear improvement in revenue, profits, or future guidance, the stock could quickly lose its recent gains, making a wait-and-see approach more sensible for now. And that wraps it up. BigBear AI is an exciting company with real possibilities, but also with real challenges. As always, do your homework, be patient, and keep your expectations grounded in reality. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.